Diane King Hall's got to look at some stocks for us. It's what she does, host of Morning Movers. What's up, Diane? What stands out on your agenda here? Maybe cruise lines giving us some respite?
I was going to say, let's start out with the positive here. Yeah, Royal Caribbean is a winner so far in today's session in terms of the companies that we have responding to their latest quarterly numbers. It beat on the bottom line. Adjusted EPS was $1.63 a share. This is its 11th quarter in a row of a beat on its bottom line. Revenue was $3.76 billion. In terms of its forecast, adjusted earnings for 2025 will be $14.35 to $14.65 a share. That will be a more than 20% increase in profit. That is better than what the street is looking for. Booking rates still at record highs. Now we are in the busiest time of the year. This is what Royal Caribbean says. You're seeing shares jump more than 6%. They also revealed they have some plans to launch this river cruise business. That's going to launch in 2027. They've signed an order for nearly a dozen ships with that. So it shows that the growth there, they've been able to maintain the growth. Royal Caribbean, we know, was a winner last year. It's still strong, and it is leading to some sympathy moves across cruise lines.
All right. I love it. You love to see it. How can you not root for cruise lines? You know, it's fun for the whole family.
Yes, indeed. I mean, that's the spin, and I mean, it just shows that what had become, you know, it was an idiosyncratic response or a springback response to everybody being inside, and it's become a habit, these experiences. So Royal Caribbean continues to be the beneficiary of that. They also talked about how they maintain tight controls, and keep in mind their CEO was formerly the CFO. So you've got strong fiscal leadership, whether you're talking about the current CEO and their current CFO.
Yeah, I mean, it seems like they're doing the right thing and finding the right combination of booking and expenses and the boats, ships, what's the word I'm looking for? Vessels.
Yeah, vessels, exactly.
Vessels.
I mean, they have massive ones. And, you know, one thing that had been talked about in recent years was about them reducing their carbon footprint, which they've been working on in the move to LNG. So that's one of the things that because, you know, they're seen as big floating cities, essentially. They're massive ships.
Yeah.
Whether you're talking about Icon of the Seas or Utopia, et cetera. So that's one of the challenges. I don't think we'll hear as much about that in terms of any pressure on that, given the new administration.
I'm going to have a kid just so I have an excuse to go on the Icon of the Seas.
We can do a company field trip. Let's do that.
Yeah, that would work too. I mean, because that thing's ridiculous, almost like comical when it came out, but very, very impressive. Very, very impressive feat of engineering. So, you know, to some extent, I feel like you should just be rewarded by that. There is real innovation happening here. I mean, if you've ever, I've gone through even just going through the website itself of the virtual tour of the Icon of the Seas is wild. So that is a feat of engineering, no doubt. And it seems like that's helping them catch a lot of the branding power versus some of the peers. So big breakout, big win, and good numbers. And they've had good numbers now for several quarters in a row. So. It's kind of like the anti-AI trade, right? It's like anti-tech. You're like on a boat, you know, It is.
And they always say that Wi-Fi is never very good on those ships. So, you know, when you're out at sea, just be prepared to be disconnected. But they would argue that they are integrating some Wi-Fi into, you know, how they operate. And maybe that's a part of what kind of offerings that they, you know, offer to the actual cruisers, or how they adjust maybe ticket pricing. I can't speak to exactly. But one thing to note also, as I mentioned, the sympathy moves that we're seeing in the cruise liners, you're seeing Carnival up a little more than 3%. Norwegian's got a 2% advance right now, nearly 3%, honestly.
Okay. And then the river cruises are coming too. So that's kind of cool. Celebrity river cruises, which is, I don't know, that'd be pretty fun. Don't have to go to the ocean, I guess. All right, sweet. Let's talk some General Motors here. As GM did down a bit, but I had a good year. So how do you interpret this?
It did. It did. I mean, look, this is in part because in the pre-market, it fluctuated in terms of the response. Some of the pressure that you're seeing is following its earnings call. It did beat on the top and the bottom line. Its forecast was actually also better than expected. So what went wrong? Let's get into it. Adjusted EPS $1.92 a share. Street looking for $1.75. Now, overall, when you account for the restructuring charge that they had, they did lose nearly $3 billion in the fourth quarter. But that's not what the Street is discounting in terms of the future path. Revenue is $47.7 billion for the fourth quarter. Full year adjusted 2025 profit, they're projecting between 11 to 12 bucks a share. Again, better than expected. What happened? On the call, they were asked about how they're preparing for tariffs from the Trump administration. And they essentially said, in terms of their modeling for the forecast, that wasn't accounted for. And I think, they have to me, be careful about that commentary. They've said they have a playbook. And this was yesterday. They said they have a playbook for that, but in terms of the actual numbers, they said they didn't model that out. So it's it feels like a tightrope act, because you do hear companies talking about, how much should you prepare for tariffs, especially when you think about the ping pong effect, like think about the threat of the Colombian tariffs or tariffs on Colombian products that didn't come to fruition. So, do you account for this? Do you not? When do you account for this? And so right now, the Street essentially responding with, we're out right now because they didn't model that.
Okay, interesting. Sounds like they should do some better modeling, perhaps. But okay, Tesla down 2% right now is kind of telling us that we've got risk off generally. Sometimes that spread gets interesting. But GM had a good year. Doesn't sound like they are. I mean, they're far from out. Ford is the one that seems like it's like way behind. So it's not a terrible report from GM. It seems like some selling to just folks moving on from the trade maybe for now.
It's not. I mean, look, their North American unit was still their strongest unit. There's still obviously weakness in China. EV sales even had some turnaround there and some strength there. EV sales were 44,000. That was up from a little more than 32,000 in the prior quarter. So you even see some growing strength there. But again, even with the North American unit, some of the concern is with some of the parts coming from, say, Canada or Mexico. What happens when tariffs are instituted there? So that's one of the concerns that's hitting the stock, and maybe that potential exposure with regard to tariffs and how far the stock has run has some investors hitting the sell button when it comes to GM today.
Understood. Okay, thanks, Diane, very much. Appreciate that. Another one we had on the list: Lockheed Martin down 6%. So for those looking for the defense trade, that's taking a little bit of a hit after earnings too.